This is Andy Pedraza with Special Effects Academy, and we're going to get started on our pre-market review for the week of March 18th in just a minute. You guys should all be seeing my screen by now. As always, feel free to interrupt and ask questions at any point. This is a very informal gathering just to take a look at what the week is showing us. But if you're not talking, I would ask you to mute your phone so we don't get any background noise. Joseph, I see you joined. Welcome aboard. I'm glad I managed to get that out to you in time, and sorry for that mix-up.
You're good. Thank you so much for having me.
No problem, man. All right, so I am going to get this started. And as usual, well, this is just a bullet point of what we're going to go through today. The currency strength meter, our fundamental announcements for the week. I'm going to take a look at the major pairs, look at any setups in progress, as well as talk a little bit about what happened last week in the trading room and in general, and wrapping up with where do we go from here. And as I said in my email, Joseph, I will send you separately an email with all the links and times for the sessions throughout the week. And I'll probably have a chat with you if you have a time, just get a quick phone call, and I'll give you a better explanation of how we structure everything, since we did a poor job in getting you involved during the week. I honestly did not see the sign up until you emailed me earlier.
Oh, no problem. Appreciate it.
Okay. Whereabouts are you, Joseph, around the planet?
Right now, Charleston, South Carolina.
All righty, good old South Carolina.
Can I ask where you're from? Joseph, can I ask where you're from originally?
Originally New York, Saratoga, New York.
Okay. I'm picking up a little bit of accent, but it doesn't sound very New York.
Yeah, no, I'm upstate near Albany.
Okay, good.
Yeah, the furthest south I've lived is Raleigh, North Carolina, but I used to go to South Carolina pretty frequently on business. So I know the area fairly well. All right, on that note, we will get started. So the first thing I'm going to look at is our relative strength meter. I usually compare the prior week, which is the chart you are seeing on the left side of the slide. And this shows us what the week before last, the week of the, I guess this would have been the week of the 2nd of March did. Actually, yes, I'm sorry. Yes, the week of the 2nd of March is what we're seeing on the left. So we can see that the huge winners were the Aussie and the Canadian for the week prior to last. And all the other currencies pretty much depreciated, with a little bit of a mixed bag as you get into the pound, the Kiwi, and the dollar were pretty much in the middle. But we can see the clear winners being the Aussie and the Canadian, and the clear losers being the Swiss and the Euro. This past week, the losers became winners and the winners became losers. We saw a complete recovery in the Australian dollar as well as the Canadian. And I've been waiting for that Canadian recovery for quite a while, as you guys know, waiting on it, but not jumping on any trades. I do not like to jump in ahead of time. I wait for the market to move, and then I jump in right after it. The Swiss also gave a lot of movement this past week, getting stronger against all the minor pairs. Well, I'm not going to include the Euro as a minor pair, but that was the only one, and it was really flat. We'll see this when we look at the chart, that the Euro Swiss basically did not move. However, the Swiss against the pound, the yen, and the dollar did weaken significantly, and we did play one or two of these moves throughout the week. The Euro was also a very mixed pair. The pound, another pair that I had looked into a recovery, fulfilled last week and got stronger against everybody else, as did the yen against everybody really except the pound. So we can see that the pound was the only one that strengthened against everybody else. and the Canadian, the only one that weakened against everybody else. After that, you see some stronger, some weaker, but that is pretty much the action we saw for last week. All in all, it was a good trading week. We made quite a decent amount of pips, so I'm happy with the results last week, and we're going to try to make this week as good or better. One thing I do want to point out is that we do get a lot of opportunities trading 1 week into the next, precisely because of these reversals. We can see that any pair that did extremely well in 1 week, any week at all you care to look, unless there is a sustained trend, you will see it backslide and pretty much reverse for the following week. So we're going to keep a close eye on some of these pairs that did particularly poorly or particularly well in the week. If it is a continuation and we see that the trend is continuing, obviously we will jump in that direction. But we're also going to be highly skeptical about that and looking for any sign of reversal, especially the first 24 hours of the market. The market will open in about a couple of hours my time as the Asian morning rolls along. And I'm pretty much glued to the screen into the wee hours of the morning. Those of you who know my habits know I go to bed around 4 or 5 a.m. And I'm in Pennsylvania these days, by the way, Joseph, originally from New York as well. Born and raised in Flushing, Queens, but I moved out of there probably when I was around 10, 11 years old. And I go back to visit every now and then, but I'm just not a big city boy anymore. Continuing on that note, the next thing we cover are our fundamental announcements for the week, just so we don't have any surprises. We're going to have our first high impact announcement coming out of Australia tomorrow in the night at 9:30 p.m. my time. Those will be the Royal Bank of Australia's meeting minutes. They do tend to give guidance as to what the economy, or rather what the people leading the economy plan on doing. So you'll see things like whether interest rates are likely to change in the next month or so, as well as some other key details. So the market does look at these minutes pretty closely. And if they determine that anything is likely to happen, that will make that currency move in advance of that, just on the hype and the emotions that this sparks. Next, we have Tuesday. In the early morning, we have the pound. The British will be releasing their CPI, their Consumer Price Index. I normally don't pay a whole lot of attention to these kinds of announcements. They don't tend to have a really high impact on the market, despite them being labeled as high technically. So I'm not going to lose any sleep over that. Same the next day with the average earnings out of the UK. I'm not going to really dwell on them. However, then we get into Wednesday afternoon. We have the Fed speech and Fed monetary policy, and more importantly, the Fed interest rate position. These are about as high level of fundamental announcements as we can get, especially coming out of the dollar. So this will be a key thing that we're going to be taking into account prior to that. So any open dollar trades, we will be making sure they're either closed out if we have enough profit banked, or we tighten any stops and move limits and do as much as we can to set us up for as much success as we can try to guarantee. I'm usually very nervous around anything coming out of the Fed. The markets tend to go crazy, and that's not going to change. So the interest rate position at this, the rate, not the position, at this point is 1.5%, and they will decide whether to increase that. There is little to zero chance of it going down. The only direction is up. And if it moves up, it will probably move up by 0.25% or 0.5%. So it'll go to 1.75 or perhaps 2. I do not think they will be changing it. Neither does the market at this point. But of course, that's just my opinion. And the markets, whatever the Fed does, that's on them. So we'll be listening to this one live when it happens and trading accordingly. I may open the trading room at that time simply to trade the announcement if there is one that changes anything. So I'll make that decision by Tuesday and email it out and let you guys know. On Wednesday afternoon after the Fed, we also have the Royal Bank of New Zealand coming out with their interest rate decision, currently at 1.75%. Not sure that they will be changing anything. The likelihood of that is virtually nil, but still something to keep an eye on. And then we have the employment change out of Australia in the nighttime for Wednesday. Again, if these numbers change significantly, it will have an impact on the Australian dollar, but usually these aren't critical and can be ignored. More importantly, Thursday in the morning, 8 a.m. U.S. Eastern Daylight Time, we have the Bank of England's interest rate decision. That is another key one. So this is going to be a very fundamental week, which should make us cautious and nervous at the same time, because all of these interest rate decisions have the potential to significantly move a currency in either direction. There's no way to know in which one until the actual announcement comes out. And I'm going to move to the next slide because it would not fit in a single one, but we have a few more to go through. So continuing on Thursday, it is definitely a UK day. Besides the interest rate decision, they have the asset purchase, monetary policy. Asset purchase you can ignore. The key thing is going to be the interest rate decision, but the monetary policy summary that comes out at the same time will also have an impact. These three vote things that you see are simply related to the interest rate decision. They will tell us how many of the people on the board decided to cut the rate, or rather voted to cut it, voted to leave it unchanged, or voted to hike it. They are very democratic, so if that rate changes, it will be because these people voted to either hike or cut it, and that majority won out. So the last vote was unanimous. They all decided to leave it unchanged. Even if the rate doesn't change, if this number flips around into any of the other two categories, so that we see that 7 of them decided or voted not to change it, but 2 of them wanted a hike, that also sends a signal out into the market that that their intentions or their ideas of what to do in the future are starting to change. It makes the likelihood of a hike in the future larger if we have any votes moving into the hike or, of course, the cut categories as opposed to unchanged. And, of course, they released the minutes, which tells us all this stuff I've been harping about. But, again, the key one is going to be the interest rate decision, closely followed by the breakdown of the actual votes. And last but not least, we have the retail sales month over month coming out of the Canadians. Not one that is critical. The Canadian is in a pretty much in the doldrums. It's just digging itself a deeper hole. This announcement will not have any significant impact in either direction and can likely be safely ignored.
Andy?
Any questions so far
Yes.
before we move into the pairs? Yes. Hayden?
Right. I've been wondering, do you have let's say, an Andy gut perception about the Fed and whether they're afraid to tighten too quickly, or whether they really would love to tighten rapidly? Any read on what you think they might be thinking, I guess, before the pre-language?
I think that there is a fear in the Fed right now that they've done too much too quickly. The unemployment numbers going down as drastically as they have. We're at the lowest unemployment in quite a while. And when we have low unemployment, that sparks fears of inflation, because you need to start increasing salaries to get people to take jobs. People have choices. when the unemployment is low because everybody is hiring. And they can demand higher wages. Higher wages spark inflation. Inflation needs to be controlled or it gets to be bad for the economy. So the Fed is going to be very nervous about doing too much too quickly. My vote is that they will not change anything this month. They will probably make a couple. I don't see more than 2 or 3 rate increases coming out of the Fed this year. They're going to have to do one soon, but I don't think it's going to happen this month. However, what I think is completely immaterial, and that'll be the subject of my last slide. I'm actually on a crusade in that sense, but that is my opinion for what it's worth.
What about, because I've heard the argument that the Fed is really 2 to several years behind the 8 ball, that when they should have started cutting back and easing, they just carried on for whatever reason.
Yes.
So they're behind the 8 ball. They're in a tight spot, and they could end up, if they cut back too much, they're screwed. If they don't cut back, they're screwed.
Yes, the question is going to be in which scenario are they screwed more. And I think raising the rates too quickly is going to screw it up more. We already saw that mini crash in the S&P and the stock market in general about a month ago. That was a direct result of the unemployment numbers being that low. And that must have given pause to the Fed in that they cannot move too quickly, or it's going, when you're driving a car and a deer swings out or whatever, and you tend to overcorrect and then overcorrect again, and you end up crashing against the mountain. That's what's going to happen if they do too much too quickly. It's going to start swinging in opposite directions, very wild manner, and it'll be that much harder to control. And they know that. The question is, will they actually pay attention to that, or just say, what the hell, we're going to do this anyway?
Okay, Mike, may I ask another question?
Absolutely.
The S&P concerns me. I think that it's insanely high for the for the basic economic conditions of America. So that
yes.
I don't justify this price for the S&P.
Correct.
So everybody's screwed.
Well, everybody's screwed except me. I'm shorting it.
Good, me too. I have been for years. Great.
Yeah, but I'm shorting it and I'm long on it as well because I got an option straddle, and right now the option straddle on the way up is the one making a ton of money for me, and the other one is just hanging out. But I'm going to make money in either direction, so I don't really care. The people that have their pension funds invested in the stock market right now, and anybody else strongly invested there, they're going to have a rude awakening because a crash is coming. The question is not if, the question is when. Now, I don't think it's coming that quickly, though. This may take another 2 to 3 years to play out. You remember when I first told you that the S&P was going up to 325, you were very skeptical. You're not that skeptical anymore, are you?
No, but I'm looking at that monthly candle formation, and if March doesn't get above February, we start to get there's a high forming.
Yes, but we've seen highs forming before. The market is not a rational beast. The market moves on emotion, on hype, and to a degree on manipulation. So you are right. We're way overdue for a crash, but we've been overdue for a crash for about 3 years now.
At least, yes.
Yeah, so that's not telling me anything. So I will play the cautious game. I'm playing both sides of the bet, and it's costing me virtually nothing to be in those bets. So I'm perfectly happy with them.
Yeah.
But the people that have actually put everything on one side of the table as opposed to hedging like I'm doing, those are the ones that are either going to be very rich if they put it on the right side of the table, or extremely, extremely poor.
Yep.
And some of their money is going to be flowing into me, so I'm okay with that. Somebody's got to take the opposite side of my trades.
Sure, and I definitely agree that your trend line is unbroken and no sign of it's being broken. So you know, I'm reading you that way. Absolutely.
Yeah, and remember what trend lines do when they break, and the chart on the screen for the Euro USD is a perfect example. You see this trend line it had been following. What happened when it broke? It did go down, but then it went all the way back up again to test it before finally deciding that it did want to go down, and it's now hanging out significantly below the high. That's precisely what you're going to see in the stock market as well. You're going to have a little bit of a crash. Then everybody's going to say, that was nothing. It's going to rise again. And then you're going to have an even deeper crash eventually all the way to the bottom.
Right.
So you got to take that into account. Rarely do you see a break that simply heads in one direction without doing at least one test of the underside of a trend line, or the top side if it's going in the opposite direction, of course. But anyway, I hope that answered a bit of your questions there. No
Excellent.
problem.
Yeah.
And I'll move on. We're looking at the Euro USD. The Euro USD has been trading very flat despite the trend line break. It hasn't moved much from this area at the top of the chart. It is getting to the point of entering this shaded area, which is one of my major areas of support in my indicators. So what we want to see ideally is for it to break the outer trend line before we think that it's a good idea to short this pair on a long-term basis. I will happily trade it up and down in these little swings, which aren't that little. This is a daily chart, so these are some pretty big 100 to 200 pip moves that it does here and there. In fact, 300 pip moves if you look at one of these longer, and this is probably almost a 500 pipper right there. So there's money to be made even in sideways markets. But I'm not going to be looking for an entry on the daily chart. I'm going to be looking for entries on smaller time frames on the hourly as we look at it doing these little swings up and down. These will look much bigger on an hourly. But when it does cross this trend line and get out of the shaded area on the bottom side, I'm going to be taking an entry on the daily itself, and that's going to be at least down to the 118 area. So, and probably deeper, but it's going to start with at least a 200 pip move down. And those are the trades I dearly love to take. Moving on to the USD Swiss. And I'll wait for the screen to catch up so you guys can see it. Okay, the USD Swiss has been in general, and all of these are daily charts. I'm only going to be looking at daily charts in the start of the week review. The chart has been heading in a downward direction, but it does have periods of recovery before it heads down again. It is in one such period of recovery right now, and the USD Swiss has been going up into obviously dollar strength or Swiss weakness, whichever way you want to play it. And it usually likes to stop around the parity level. So 1 is where it tends to stop. Of course, these trend lines are trending downward. So it is right now at resistance, not just from the trend lines, but from my shaded areas. If it breaks through that, then its next stop is going to be around 0.9750, which is the top of this trend, the bottom of this trend line, I should say, but the top of this channel that it would be entering. So this is another one. We did trade it successfully last week and took 100 or 150 pips, I forget, on this Swiss weakness or dollar strength. And this is another pair I'm going to be keeping a close eye on for the trading week and see what we can do. Likely trading it as long as it doesn't break this trend line heading up. I will be a buyer as opposed to a seller. But again, my entries on this one are going to be based on the hourly charts, and there is a good likelihood that it will bounce off the resistance at this level, both from the cloud as well as the trend line, and start looking for the bottom of that channel. So we're not going to try to predict anything here. We're just going to be trading in whatever direction it wants to move when it does decide. And that's usually the first day of the week. We can see what the currency pairs want to do for the remainder, and we take that guidance accordingly. And again, any questions on any specific pairs as I'm going through, feel free to stop me and ask. I'll be happy to elaborate on anything. The pound dollar, obviously you can see from this chart that it is heading in one direction and one direction only. It is heading into pound strength against the dollar, or dollar weakness against the pound, whichever one you want to see. Of course, the pound has been coming from the very bottom after the Brexit and election debacles in the UK, and has now recovered higher. When in 2016, when they voted Brexit, I said publicly that it would recover to around the 140. It has now exceeded that by about 350 pips before dropping again to right below the 140. So kudos to me for being that good. I did trade it up the last couple of years, and it's been a very good pair. I do think it's getting to the top of its range, so it may be entering a period of consolidation. I would not expect it to significantly go down. If anything, it might still have legs to go up. So I'm going to be trying to trade it in a long direction or towards pound strength. But I'm also going to be very careful because I think it's getting to that point where it's done what it needed to do. It's reached its state of equilibrium and may not budge for a while. Time will tell. As always, I will be keeping a close eye on both the daily and hourly charts to see what opportunities are there. I did not trade this pair last week, I think. Yeah, I didn't trade it. Or if I did, it was a very short trade. But we'll see what it brings for the coming week. Next is the USD JPY. The USD JPY is at the very bottom of the channel. I am very bullish on the JPY, which means I would normally expect this to go even further down. I'm in for Japanese strength. It has been fulfilling that for quite a while. You can see from all the little blue-red arrows that I've been trading it all over the place, and for the most taking profit out of it. It is following a very steep trend line that it just followed all the way to the bottom of the channel. This is the major area of support. If it pierces this area, then this pair is going to where I expected it to go, which is about 100 even. So 100.00. I'll be waiting for that trend break. If it exits this channel and continues going deeper, there's probably a good 500 pips we can easily take on the next drop. But there is also likelihood, as before, that it will reach some sort of bottom, and then go to the top of the channel and then drop again. It does like to do these swings within that channel, as you can see just from the area that I'm showing on the chart. So another one that we're waiting on a good signal to enter in either direction. I'm not married to any opinion. I trade in whatever direction the chart is going to be giving us for the week or for the month or whatever time frame I'm trading on. But this one is definitely on my radar, as are most of the Japanese pairs for the week ahead. Moving on to the USD Canadian. We pulled most of our profits last week out of the Canadian pairs. As I said, I had been expecting some sort of recovery from the Canadian, which played out the week before, and then this week slid again into Canadian weakness against the dollar and against a lot of the other currencies. When I saw, and you can see that I traded this one all the way down. Once I determined that it wasn't going down anymore, I started trading it in the opposite direction. So we cleared profit in both angles, both as short and as long. And likely it still has a ways to go up. The Canadian is in a period of extended weakness, hasn't been able to recover from that in quite a while. Eventually it will, but right now it is following the lighter color trend line that we have here all the way towards the top. It does not have any significant resistance along the way and may very well head back to the top of the chart. And that, my friends, is a good 600 pips. Another opportunity I would dearly love to trade, and it seems to be moving quickly. So we'll see what the Canadian pairs bring for this week, but they are also top of my radar, seeing as they gave me about half the profit for last week. And Jeffrey, I'm going to come back to you just to see what you still have open before we wrap up, but I think you're still in at least one Canadian trade, right?
Hello? Can you hear me?
Yes, sir, I hear you.
Okay, one moment. I gotta review that. I think
That's okay. You yeah, you can. I'll move on, but interrupt whenever you want and let me know what's going on.
I'm in a Euro CAD still.
Yep, Euro Cad. You're doing well with that one, if I recall. So yeah, that may continue moving in direction of the direction it was last week. So don't be in a rush to close these out.
Okay.
Okay, the Aussie dollar. The Aussie dollar is also trading basically sideways. It has been moving up, but has been unable to breach the resistance at the 0.8125. It's done two tests in the visible area of this chart, has failed each time, and then drops to about the 0.75 area before trying to make another attempt at the top. Right now, it is definitely dropping. This is one of the trades we took in the wrong direction last week. We got faked out by this bit of bounce and recovery, and then it simply plummeted in the last 2 days of the week. No worries, we made profits elsewhere, so this was a minor blip in the grand scheme of things. But this has now renewed its downward movement. It has broken through the trend lines that were giving it support, and it's now hanging out right above a point of support at the 0.77. If it breaches that, then it would certainly easily continue for another 200 pips. So the Australian is another one I'm going to keep a close eye on. But let's not forget that we have a major announcement from the Royal Bank of Australia coming out in about 24 hours. So I'll likely not be entering any Australian pair this first day of the week. I'll wait till Tuesday and afterwards for it. But I'll keep an eye on them as well. The Kiwi Dollar has been pretty disappointing for the last 2-3 weeks. Basically in a sideways pattern. It's now at the bottom of its recent range. It's just been bouncing off these 2 points. So it may be making another trip up to the 73 area, but there's about 150 pips in between these. Not a whole lot. And we will, I mean, if we don't see anything better to trade, I may trade this pair. But I try to keep about 5 to 10 trades open at any given time. And if one of these is moving sideways, it tends to drop off my radar because there are better opportunities out there. When it was doing stuff like this, where it was just heading pretty much in one direction, it was great to trade it. And we did at certain points. And we traded it in the recent past as well, but always for very short moves. So in the hourlies, you will see that sometimes it's pretty clear that it's going to give us 50 pips in one direction and another, and I'm perfectly happy to collect that. But I'm not looking at it as constantly as I do other pairs. Euro pound, all the pound pairs, I have expected pound recovery. The Euro pound was one of them. We saw some very nice moves last week, and we took one trade on it pretty much from the top, and it would still be going strong. We did already exit it, but it is still heading towards the bottom. Jeffrey, I know you're still in that trade. Keep being in that trade. It would probably have enough room to move another 100 to 200 pips before it fizzles out. If it does fizzle out, it could very well be full recovery heading towards the bottom of the chart. But until, keep following, keep moving your stop so that you lock in profit as it goes down. But this is another one you should not be in any hurry to close it. Just let it produce. Moving on to the Euro JPY. This one is also a very sideways chart and not one I'm too eager to trade. We took a major loss on this one last week, or rather I should say we would have taken a major loss, but when I saw it moving against the direction, I did hedge it, and the hedge ended up making more money than this one lost. So all in all, we ended up in a good position. But it is still very wishy-washy and could go in either direction. So this is one I'll likely leave alone for the at least for the first day or two until I see a little bit more of decisiveness. Ideally, I would like to trade this one towards the bottom, but it keeps stalling around this level and just well, fizzling and going up or sideways. So we'll wait again to see if it gives us a good opportunity, but it's not going to be too high on my radar. Euro Canadian, this one was a clear winner last week, and we traded it up, I think, at least 2 times. We got in twice and cleared 200 plus pips altogether on this move. This is pretty much the past week is this bottom here, and then it just went straight to the top of the chart. It has, I think it managed to clear the most recent high, and it likely will have enough legs in it to go a bit higher. But as with the other pairs we were looking at, like the pound against the dollar, I think it may have reached a plateau, and it's very high from the channel it was following for quite a while. So we may see a test of at least the top of that channel before it continues on the way up. So I'll be another one, all the Canadian pairs I'm going to be keeping a close eye on, including this one. And we'll trade it happily in either direction. But I'm going to need a lot of confirmation before I re-enter this trade or even trade against what I did last week. Got to protect that profit, guys. Moving on. Euro Swiss. The Euro Swiss for the entire week, and it is these very flat candles you see right at the tail end. It traded sideways. It was pretty much the joke of the week. I would look at it once a day, laugh, and move on. So it is stuck in that sideways motion and not giving any trade signals. The chart, as you can see, long term, it is on its way up. So this is Swiss weakness against the euro. That one may also have reached a top and is now trying to test it again, but likely will not go much higher than that. And that is maybe 100 pips worth of activity. And it has a lot more downside than upside. So on a break of this trend line on the daily, I would start shorting this one like there's no tomorrow and looking for a good 1,000 pips. No, I'm sorry, I'm reading this wrong. I'm looking for about 600 pips, 600 pips of action once it clears this trend line and does a definitive break. At that point, it will also clear the shaded area that you guys can see here towards the tail end. Both of these indicate the support that it's going to have to overcome before it can head deeper. Of course, it will have stops along the way on the other points of support, but all in all, there's just a lot of empty real estate here that the candles would be very eager to fill. So this is probably going to be a trade in the next month or so, and we'll be looking forward to that, but likely not for this week. Gbp Canadian, another clear winner. The pound got stronger and the CAD got weaker, so this one really skyrocketed, making ever higher highs and no retracements at all for the entire week. So it is now poised right there at the top. This is another one we traded 2 or 3 times on the way up. We just getting back in on it and teasing pips out of the move. And again, this chart is heading in only one direction. I don't expect it to break towards the bottom anytime soon. This is one of those that, if anything, I would expect it to be able to clear at least another 200 pips in the short term before it falls out of favor and starts doing any significant retrace. The retrace will likely be to the outer trend line, which is this one sliding upward in the lighter color. So that will be the retrace, and it will likely be at a much higher point. It will reach it somewhere here in the future. It will do a little dip before it continues up. In the meantime, all the Canadian pairs I've said multiple times are on my radar for this week, so this is one of them. Pound JPY. The JPY, again, is, for me, a strong currency right now. And normally I would expect it to head towards the bottom into Japanese strength, but so is the pound. So what you're seeing here in all this sideways action with a bit of breakouts to the top and to the bottom before it re-enters is that fight between two strong currencies, or two currencies entering into strength. Relative to each other, they're hanging out pretty flat. We did trade this one up when it exited the channel. We figured it would do a retest or even re-enter the channel. That's exactly what it did. So we traded it up very successfully last week after it broke the downward trend line. And we'll see if it has anything to offer, anything to offer this coming week. Right now, I would be simply keeping an eye on it before it, or waiting for it to give me a direction so I can set up my entries and take some profit on it, or at least have better odds of taking profit. So I'll be waiting on this one. Aussie JPY. If you recall earlier, I said that our biggest losing trade of the week was the Euro JPY. I entered completely in the wrong direction. This pair was my hedge. When I saw that the Euro JPY was going opposite to what I wanted it to do, I entered the Aussie JPY in the opposite direction. I shorted it. It went on to absorb the losses from the Euro JPY trade and then pretty much double. So this drop was all on Friday, and we captured every single pip in this large drop, and that was about 200 pips all told that we captured, and we were still in that trade. It's an open trade. I decided to leave it open for the weekend because this has cleared. In fact, you can see the actual trade here on the screen, because this is a chart I pulled from my live trading program. So this green line here is where we sold it. And right now it is down there. I have adjusted my stop. This thick red line that you see is my current stop. So if it retraces that far, it will be taken out with that profit. But if it keeps going down, this trailing stop, that's what it is now, will continue to follow it on its way down into deeper profit. So we'll see what the market open brings. I don't know if anybody else is in this trade, but if you are, I would do the same thing I'm doing. Just adjust your stop. Make sure you're protecting enough of that profit that you're not at risk of giving it back, and just let it continue to go as far as it's willing to go. Okay, our next pair is the Aussie Canadian. We did see that the Australian dollar in general weakened this past week, and it weakened against everybody, including the Canadian. So the Canadian currency was weakening altogether, and this is one of those few pairs where the Canadian went into strength against the other currency. We did not trade this one. They just didn't give any good signals. It probably would have been an excellent trade long about a month and a half back when the bounce off the trend line happened. By the time it got up here, which was the last week or two, I figured that it was pretty much at its extent. It had hit the trend line. This is major resistance. It did manage to pierce it, but that didn't last. So another one that we'll have to see what it's going to do in the coming week. It is a Canadian pair, so I'm going to be keeping a close eye on it. But I did not trade it last week, basically for that reason. It was the one Canadian pair that I did not feel comfortable with, because both currencies were doing really weird things. And that is the end of the currencies the currency pairs that we're going to look at. I'm going to do a stop right there in case anybody has any questions or comments. Don't be shy. And also because I need to drink something before my voice completely cracks.
Sure.
Go ahead, Hayden.
Thank you very much. I think something that I'm getting besides your review is your commitment, yours and Callum's commitment to getting us all deeply into it and really helping us up. You know, I'm just so appreciative of I sense your commitment behind these things, and that's great.
Hey, thank you. I appreciate that. My commitment is twofold. I truly am committed to you guys. I like teaching this stuff, but more importantly, I have skin in the game. I'm actually trading, so my commitment is to me, man. I want to make profits this week. And if I can carry you guys along with me, then all the better.
Yeah. But it helps me, and I assume the others, helps me to see, you know, what a successful trader does, how he does it, why he does it. It's, you know, it just makes it easier or more comprehensible for me to get what you're doing and where I'm headed.
Excellent. Yeah, it's a little bit of a peek behind the curtain. That's a good point you raised, though, on spending this time and all that. These charts, obviously, if you were to start from scratch, it would take you hours to build the charts the way I have them, with all the support lines, the trend lines, and all this. But once you have them, and I timed myself this afternoon, I was preparing the deck. It took me less than half an hour to prepare this deck. Why? Because all the work had already been put in. So when you guys also have your charts set up the way you want them, you've done your analysis and all that, it becomes a half-hour exercise on the weekend for you guys to go on your own through this and figure out what's going to be happening for the week. In the meantime, I'm perfectly happy to do it because, again, I have fun doing this, and I'm going to have to do it anyway. But it needn't suck out every minute of your life. This is really something you can do with an hour here, an hour there, and still bank decent profits. If you want to, you know, keep a day job, and some people do, there's no reason why you shouldn't. This is not going to take away from that. But at the same time, if you do get bored of that day job and you're making solid profits on the Forex, I'm giving you your life back. You can have, you know, almost every hour of the day back. You're going to be trading maybe a couple of hours where you're looking for setups and managing your open trades. The rest of the time, man, enjoy life. That's what it's for.
Right. Andy,
Yep.
Yeah, go ahead, Jeffrey.
Oh, I didn't say anything.
Oh, sorry. Okay.
Yeah, no, I think that was you. I was going to continue, but then you said something, Hayden. So yes, carry on.
Okay. What I was going to say is I've gotten kind of obsessed with building this 1-minute trading system, and what it did for me is I don't care, and I have no idea where and how any pair is going. Well, I'm only watching Euro JPY because that's what Callum recommended. So, and that with that one pair, I have no idea, but I get very frequent peaks and lows, and I trade off them, and it's working pretty well. I am really satisfied with the live. As I said, my back testing is very weird. It's not corresponding to the time frames, but in live testing, I'm really happy with it because a trade anywhere in general upwards of 5 minutes and within 3 hours for a trade.
Excellent, and that is what you want. If you find a way to get good entry signals on that short a time frame, and they're fulfilling more often than not, that's a keeper. That is what you want. As you know, I'm not a huge fan of the shorter time frames, but I will trade them if that's where the money is any given week. I'm going to become a scalper. Every week is going to be different. Some of them are trending weeks, and some of them are, heck, you know, take 20 pips any which way you can and do it 50 times.
Yeah, exactly.
That does take a little bit more time, though, especially if you don't have it automated, because then you will have to spend hours on the charts. I guess that's my main problem. I'm lazy. So I want to spend maybe an hour or two a day at most actively trading, and let that bring in, $5,000 a week.
Andy,
If I can manage that, I'll be a happy man. But if you automate a minute candle trading system, I don't care what the time frame is. The question is, does it make money? Yes, sign me up.
Sure. I mean, I've got my highs and lows marked, so that they adjust every, whenever there's a change. It's basically a 10-minute high and low to find the extremes. So it's all set. I don't do any work, any extra work, and I don't care where it starts.
Exactly. Nor should you. You should not care. That's the beauty of this stuff. I don't care if this goes down or if it goes up. All I care is that I get a signal and I trade it.
Right. It's a language. It's a language.
Yep.
Learn the language, and you understand it. With limits. It's not a logical language, but there is a structure to it. That's for sure.
Yes. In alchemy, they talk of something called the language of the birds, which was the secret language in alchemy, where they figure out what they needed to do. I've always seen the parallels between some of this mystical stuff and what the charts say. It really is. They really do speak to you. These charts, or at least they speak to me. And that's when you've arrived at some level of expertise in this, when the chart just jumps out and says, sell me or buy me.
Yeah, exactly.
That's a lovely feeling. Awesome. Thanks for the feedback, man.
Sure. I listen to
Okay. Yep, sorry?
I listen to insects, as a matter of fact.
Yeah.
I have a program, a sound program, that, and I love, in the late evening, I love listening to insects and their sounds. You were talking about...
It is calming. The natural sounds are a wonder. I have the Amazon Alexa, and you can set it up to play those kinds of sounds. It's just background. I love doing that. But usually my background is Bloomberg. Okay, the market has opened. The market has opened, and I'm already getting signals that my Aussie JPY trade, that the stop is adjusting, so it's heading even deeper. We'll take a look at what that's doing when I finish this deck, which is very shortly. We've got maybe a couple of slides left. We'll take a look at what the market is doing very quickly. Anyway, apologies. This should say week of March 18th, so I fell asleep at the helm there and didn't update it. So this is for the week of March 18th. The setup's in progress. The Canadian pairs, I've been telling you guys all along as we look at the charts that the Canadian dollar has returned to full-blown weakness after that momentary and short-lived rally. So I'm going to be keeping, this is top of my deck. The Canadian pairs are the ones I'm going to be focusing on at the beginning of the week to see if I can get into some more action if they're going to continue that slide into weakness. Oops. Sorry, I clicked the button when I shouldn't. Next are my Australian pairs. They did go into meltdown last week, and that's why we managed to take so much profit out of that Aussie JPY trade, and it is still giving profit. As I just said, I get the alerts on my phone when my trades get adjusted. So we're going to be looking for indications in this first trading day, especially waiting for the announcement from the Bank of Australia to see if it's going to continue that slide or if it's going to stage a recovery. You know me, I'll trade it in any direction. I just want the market to tell me what that direction is before I jump in. So Aussie pairs are also going to be top of my radar. And this is in pretty much descending order of what I'm going to be focusing on. So primary CAD, then it's going to be Aussie. Next is going to be Euro. The Euro seems to have topped out. It's gotten to the top of its period of strength and is in a withdrawal. I have no idea whether that withdrawal is going to be sustained or not. I suspect not. I think the Euro still has strength to keep moving, and this is a temporary retracement. But I will still be on the lookout for any opportunities to trade it down because that withdrawal may not be over yet. It may slide even deeper before it starts to recover and test the high again. And when it does that, I'll trade it up as well. But in the meantime, I'm going to be more looking for opportunities to short the euro than to go long. The pound pairs. The pound has recovered nicely the last week, as I pointed out in all the charts, especially against the euro. The Euro GBP was one of those really big movers throughout the week, and I'm happy we identified it in time and jumped into it. We are not going to always identify every opportunity in the market. There's just too many of them, and we're going to try to focus on the ones that will give us a bigger bang for our buck. Hence why I try to prioritize these every week, and this is going to be my focus. If I see something else happening, like with the JPY that is not on my list, am I going to take that trade? Of course, but it's not going to be my primary focus as we start out. I'm going to be looking elsewhere first, and if I don't see any good opportunities in any of these, then I'm going to venture out and start looking at the other currencies. Last but not least is my USD pairs. So the USD dollar has rallied against the other currencies to some degree. I still advise caution on the dollar for many reasons. As Hayden pointed out at the beginning in that little bit of a discussion we had, the whole U.S. economy is completely hyped up and is due for a correction. When that correction happens, it's going to be severe. I'm not one of those doom and gloom guys. I don't think there'll be zombies in the street and gangs murdering or anything like that. That's not what I'm talking about. But it will crash the stock market, and it will significantly weaken the dollar for a period of time. Could be a few months, could be a year. America is not going anywhere. We'll still be here after that. But from a trading perspective, you don't want to be too invested in the dollar, even if it is going up. You want to be always very cautious and see how you can hedge yourself against anything else happening. So I wouldn't open any long-term trades on it, at least not in the direction of dollar strength. But I'm perfectly willing to trade week in and week out, very short-term trades and take profit off of it. Now, just to wrap up, I do want to take a moment. I try to give a message at the end of each of these sessions just to try to teach something beyond mere analysis. And it's the crystal ball phenomenon. This week, I am active in a few forums on Forex and talking with people. And I'm constantly surprised by seeing somebody say, well, my prediction for this week or for the coming months is this, that, or the other. That's not what we are. If you're a successful trader, you do not make money out of predictions. Nobody can predict the market, and no one should even try. As successful traders, we're not predicting. We're reacting to what the market does. We're not married to our opinion. If I tell you that I think the Canadian is going to weaken further and tomorrow suddenly it strengthens by 300 pips, I don't mind telling you I was wrong. That was just my opinion at the beginning of the week. The reality of it is that as soon as I saw that it was strengthening, I started trading it in that direction. So was I wrong? Yes, I was. Did I make money? Tons of it. So I don't care if I was wrong. The important thing is never to be right. The important thing is for you guys to make profit. Don't ever forget that. Don't be one of those guys. If I ever see any of you guys posting on Facebook that I predict that the dollar is strengthening, I'm probably going to put you in detention or something and not let you join in any meeting for a week or so until you learn your lesson. Don't be that person, because that person, when they're wrong, that's all anybody's going to remember, that this guy was wrong. And no matter how much they're making or how good their trading is, that, oh, this guy sucks at predicting. Well, guess what? Everybody sucks at predicting. If you see the financial news and you take a look at what one of the talking heads, one of the experts was saying a year ago, and you compare that to what's really happening today, they were all wrong. And whoever they were laughing at the time for being an idiot, that's the one who was right. So don't play that game. Make sure you're trading with the market and you're not trying to trade before the market. That there's a huge difference. And we're going to make our profit by playing the odds right. We're going to get in trades that give us better odds of moving in our favor, and not by being fortune tellers. I would happily be wrong on every single thing I told you guys in this meeting, So long as on Friday I can tell you that I made 800 pips, that's enough right for me. And that does reach the end of this. So I'm going to opening up again for any questions anyone has. Then I'm going to quickly move over into the charts, especially the Aussie JPY, just to take a look at what it's doing right now. Anyone? Bueller? Okay, I don't see anybody asking anything, so I'm going to move right into, bear with me one second, new share. I'm going to be moving into MetaTrader. Okay, you should be seeing my MetaTrader screen momentarily. You can also see that one open trade I told you guys I was carrying, which is currently 83.81, about 160 pips in my favor, and counting. It is continuing to move. I'm going to switch to an hourly view just to see what it's done in the few minutes that the market has been open. Okay. So here we have that. You guys can still hear me, right? Somebody chime in.
Can hear you.
Awesome. Okay, so we can see what it's been doing since the open. It has not cleared the high that it made late on Friday, but it is definitely still heading in that downward direction. I'm going to add a little bit of a trend line here. Just that's going to be my guideline for the week. So as long as this one keeps moving with that trend line towards the bottom, and you can see that it's completely cleared the prior bottom, which is right where my stop is right now. My stop is right at that prior bottom from the first week of the month. So that's where my stop is right now, and my sell is way up here. So I've already captured all these pips. I've protected as far as this. And based on the fact that I'm getting alerts that the stop has continued to drift downward, it has been moving lower since the open. Right now, it seems to be just hanging out flat. So again, the market just opened. It's going to be very quiet for the next hour or three before everybody comes online and starts trading and hence moving price in one direction or another. We'll see what this one brings. It may very well reverse and take me out at the stop if that's what the market wants to do. And I'm happy with that because I've already got that profit banked or protected. But very likely, so long as it continues to follow this trend line, it will continue heading down. I would not be eager to trade it in the opposite direction until it gives me a very strong bullish signal. All the indicators that I have on this 1 hour chart are at extreme bearishness. You can see the MACD is just at the thickest it's been in forever in bearish mode. And the Williams %R cannot possibly go any lower. It's pretty much at almost at 100. It's 3 points away from being at minus 100, which is the maximum it could drop. So as far as I'm concerned, this is still in a completely bearish mode. You can see it has continued moving in my favor since we started talking by a little bit. This is a very small trade, by the way, just on the account I use for the Forex trading room. It's a fifth of a lot. So $20,000 worth of Forex in which I'm trading at $2 a pip. That's what it's doing right now. But anyway, it is the keeper, the trade I left open from last week, and so far it seems like that was a great idea. Jeffrey, what trades do you have open again? You have Euro GBP, you have Euro Cad. Anything else?
I have one more. Let me take a look. Yeah, Euro CAD, Euro GBP, and GBP Cad. GBP.
Okay, so let me look at the Euro CAD. The Euro CAD, and again, this was the one I took some profit off the table last week. It has breached the trend line. You've adjusted your stop on this one, or is it still at your at minus 50?
My stop is actually at 1.6000. Was 60.
Okay, move that up. Move that up to 1.6060.
Okay.
I just don't like the look of it right now.
Okay.
Okay, that's one. The other one is Gbp Cad.
Yeah, Euro GBP and then GBP Cad.
Okay, so this is Gbp Cad. This was another one I took 2 trades in quick succession and pulled profit out. Got out pretty much where it is right now. I see this one as a safer one. Where's your stop on this one?
1.81060.
And what's your entry then?
Entry was 1.81083.
Oh yeah, wow. So you're still in from the very beginning when we opened the trade. Okay, move your stop to 1.82.
1.82 even?
Yeah, 1.82 even.
Okay.
So you should be locking in about 100 pips, right?
Let me see overall. Let me see what I have overall. Yeah, about 100. Overall I'm at 149 pips.
Good man. Good man. So yeah, protect about 100 of those and give it room to continue moving in your direction. And the Euro GBP, I know what you're doing on this one. You're just moving your stop down to the high. Move your stop down to the next. So move your stop to around 0.8835 if it's higher than that.
Well, right now our stop is at 0.885.
Yeah,
Wait a
move
minute.
it down 15 pips.
Oh, to
0.8835.
8835. Okay.
Excellent. So that covers you. Joseph, did you have any questions? This being your first session, and guys, make Joseph feel welcome.
Welcome, Joseph.
Oh, and
Welcome.
Callum's joined us. Hi, Callum. Callum, we have a new member here in our Forex trading room. Joseph, make him feel welcome. Joseph, Callum is my partner at Special Effects Academy and co-director and co-teacher.
All right. Well, it's good to be here. Thank you guys for having me. I'm definitely enjoying it today. No questions at the moment. Just trying to take everything in right now.
Awesome, awesome. So we will be doing 2 sessions a day moving into the week. The first session will be at noon every day, noon Eastern Daylight Time. I'm on Eastern Time as are you, Joseph, so same time, noon. And the second one will be changing to 8 p.m. U.S. Eastern Time. And this is because we were doing it at 5 p.m., but since we had our Eastern Daylight Time changed, it messed up the market hours, and the market is just not doing anything much at that time. We need to give it a couple, 3 more hours for it to actually wake up in the Asian session to get in gear before we can try to take a look at it. So that one's going to be moving to 8 p.m. U.S. Eastern Daylight Time as of this week. So, Joseph, those are the 2 sessions. It's going to be the same link, but I will send you emails with all that information.
Okay.
But you can join using the same link you used today. I'm going to send you a bit more information, and you have the time a little bit, in about half an hour. If you can give me a call, I'll shoot you my phone number, and we can have a little bit of a chat so I can give you a little bit more background and explain what we do and what you need to do in order to to get the most advantage out of what we're going to be doing throughout the week.
Okay, sounds perfect.
Awesome. Callum, I'm not sure when you joined, but thanks for joining. Anything on your end that you want to add?
Not this morning. I've literally been in and out a couple of times, so it's good.
Okay, perfectly fine. I will catch up with you later then. Everybody else, unless there are any more questions, I think that will cover it for today, and I'll see you guys tomorrow in the noon session if you will be joining. Our replay of this session will be posted and emailed out to you as well, and that's pretty much it for me. Thank you all for attending.
Thank you.
Awesome. Take care, guys. I'll catch you next time.
Thank you, guys.